What's up, Banter fam? Absolutely massive show today because we are going to be breaking down both the bull and the bear case to work out where this market is headed. It's obviously quite hard right now to work out what we should be doing in terms of buying or selling or taking profits. So I did my best overnight to come up with a strategy to help you guys be able to navigate this market right now. And I'll be showing you how I'm personally playing the market with both my profit taking strategy and my accumulation strategy. I think it's a really important show for you guys. And let's just get straight into it because there is a lot to go through. The first thing I want to show you guys is this Bitcoin chart. It's been a big month for Bitcoin. It's now up 42% from the January lows. Over the past week, we've seen Bitcoin's biggest push up since September last year. We can see that the Bitcoin price from the lows are pushing 42%. So we have had a big rally to the upside, and it's the biggest rally we've had since September. If we go back all the way to September, we can see we did have this massive push upwards, which was over 60%. So we're more than halfway to reaching that level in terms of a rally upwards. So we have seen major strength coming in for the market. And today's video is all about why this strength is coming in. Because we can look at charts all we want, but we have to work out why this is happening in order to make better investment decisions. Bitcoin dominance is actually losing steam right now. So it did break out of this short-term uptrend and it's pushing below the 42% mark. The Bitcoin dominance is obviously an indicator of how the market is sitting in terms of altcoins. So with the Bitcoin dominance dropping, that suggests that the altcoins are in a very strong position. And we can see this across the board with major rallies from coins like Solana, AVAX, Fantom, and also even Cardano is now up 25% for the week. So we are seeing some of these major alts now starting to really pick up steam, especially Solana and AVAX right now. These big altcoins that have been dormant for quite some time are now starting to push up into quite a nice territory where they can push for their all-time highs again. Obviously, Terra has still led the pack though. Anyone that holds Luna would be a very happy holder at the moment, with Terra pushing up past $105 to create an all-time high at 111 last night. So we are seeing the explosion across the alts. But is it time to get excited? That is the major question on everyone's lips. Well, if you're holding Waves, Aave, ETC, VET, or Rune, you would be very excited because you've just had the biggest gains on the market over the past couple of weeks. Obviously, some of these altcoins are now starting to outperform Bitcoin. It's a real sign of strength across the market that the markets are going risk on right now. And people and investors across the globe are happy to take on a bit of extra risk in search of some profits at the moment. So we are getting some big gains across the board on top of this 25% Bitcoin recovery. But I do like to look at DeFi to see what is happening in the markets because it always gives me a nice indication of the approach that investors are taking. Because obviously when you're investing in DeFi, it's a risk-on approach because you are investing your coins and you are attempting to stake, and obviously that involves extra risks. But at the same time, it's giving people an opportunity to accumulate. So one could make the argument that the risk-off approach is to accumulate during times of market volatility. So DeFi gives us a nice window into how the markets are developing and how investors are navigating this market. And we can see from the statistics right now that some of these protocols are seeing major gains. Polkadot is up 1,018% for the past week, or is that the past month? 7 days. Like, I can't even believe that it's up 1,000%. That's crazy. We've got Waves 49% up, Solana 9% up. We could see Avalanche is up 1.5% for the month. But considering that the conference hype was just around the corner at the time, we are seeing some nice growth here with AVAX flipping Solana and Fantom for a top 4 spot. So we're seeing the TVL across a lot of these protocols increase. But what does this mean? And why is this pump happening? That is the major thing we have to answer now. Why is the market pumping? And then we have to work out, are these reasons sustainable? And are these market factors things that can actually keep pushing the price up? So let's delve now into the bull case. Let's delve into the reasons why the market is pumping. And let's delve into the catalysts that are pushing this market upwards in order to evaluate what we can do from here. Obviously, the major catalyst at the moment is Kwon. It's obvious to see that this Kwon Bitcoin reserve narrative is what is pushing up the market. So just for anyone that doesn't know, Kwon and Terraform Labs have been purchasing Bitcoin to underpin UST. So in the case that UST depegs or there's FUD or a bank run on UST, they've got a Bitcoin reserve, which means they have Bitcoin holdings to be able to come in and get the UST price back up to peg. So Kwon's strategy right now is to accumulate as much Bitcoin as possible. And we can see this because he accumulated another $140 million worth of Bitcoin yesterday, We know this because we have the wallet address of Terraform Labs, and Do Kwon also responded to this tweet. Now, Terra has over 31,000 Bitcoin. If you want some context, they are now the third largest holders of Bitcoin. Michael Saylor and MicroStrategy have 120,000 Bitcoin. So now Terraform Labs have almost a quarter of the amount of Bitcoin that Michael Saylor has. But I don't think Do Kwon is stopping just yet. We can listen to this video of Do speaking, and he outlines his plans and indicates to us that Terra is not done just yet.
I think if we scale that to $10 billion, so the reason why I want to get to 10 billion is that besides Satoshi, we will be the largest single holder of Bitcoin in the world. Now, then in that case, like within the crypto industry, then the failure of UST is equivalent to the failure of crypto itself, right?
The failure of UST is equivalent to the failure of crypto itself. I mean, this is absolutely a massive development in crypto. He said that they are aiming to become the biggest holder of Bitcoin after Satoshi. So Terra is not done accumulating. And this basically outlines that their plan is to keep accumulating Bitcoin. So this narrative is one major thing that's pushing the markets up now. People know that Terra are going to keep sustaining this buy pressure on the Bitcoin price. But in my opinion, it doesn't matter how much Bitcoin they buy. It's more the narrative that's pushing the price upwards. It doesn't necessarily matter to me if they're buying $1 billion or $10 billion worth of Bitcoin. The point is that they're buying. And the fact that they're buying is setting a precedent for the rest of the market. Imagine a future where Bitcoin acts as a reserve currency for multiple crypto protocols. Imagine if your AVAXs, your Fantoms, your Solanas, or other stablecoin projects use Bitcoin reserves to underpin their holdings as well. This could be a massive trend that we could see emerge among crypto as a whole, if successful with UST at the moment. This is kind of laying the groundwork for other stablecoins and potentially in the future, maybe even the US dollar being underpinned by Bitcoin as a monetary reserve. So this is why the narrative is so big for Bitcoin. It's not necessarily because the buy pressure is massive. I mean, billion-dollar buys are big for the market, but it's not going to push a trillion-dollar market necessarily as high as it has run. But what is pushing the market up is the narrative here that Bitcoin can become a monetary reserve standard. And they're not stopping yet. They're going to keep accumulating the Bitcoin price. So that is very exciting for crypto as a whole. And it has me wondering if other projects adopt the same strategy, what could happen to the Bitcoin price? It could potentially be explosive. We are seeing some other factors, though, for why the Bitcoin price is increasing. Obviously, we are seeing this massive increase in inflation at the moment. Michael Saylor said when sovereign debt is no longer a store of value, the rational response is to replace bonds with Bitcoin. I mean, could we see a future where Bitcoin does replace bonds as a kind of this standard for sovereign debt? Because the inflation is so high at the moment. So that is a real massive factor because people are buying Bitcoin as an inflation hedge. That is the narrative at the moment, that people want to purchase Bitcoin as a hedge against this market at the moment. So we can see that Germany's year-on-year inflation is at 7.3%. But look at these rates right now. They're at 0% for these bond rates. So could this be a future where we lead into Bitcoin as the store of value? I think yes, that is a large factor for why the market is pumping at the moment. And there's also another factor. That's obviously institutional adoption. And there's no other institution bigger than a company like Apple. They're the biggest company in the world. They have a market cap of over $2 trillion. And we did see them start putting in these Bitcoin logos, maybe a sneak peek that they are looking to integrate Bitcoin, maybe in terms of Apple Pay. We did see Jack Mallers and Strike leading towards the fact that this could be something that they are going for. And if Apple does integrate Bitcoin into Apple Pay, I'm not expecting it to happen overnight, but it's certainly a huge catalyst in the future. So I think there's a bit of a buzz right now around some bigger institutions getting involved, and it's just something interesting to know. Obviously, it isn't guaranteed, but Apple getting on board would be absolutely massive. But although there are bullish catalysts, there are also major bearish catalysts. And I want this video to be a comprehensive outlook on the market to help you guys make better decisions in terms of whether you should be buying or whether you should be selling. So let's look at a couple of bearish factors. And then after that, let's jump into the charts and we'll get Kyle on, one of our TA experts at Crypto Banter, to help give us a better indication of what we should be doing in terms of getting entries. But let's look at this bear case, because I don't just want to be biased here and give you the bull case. We have to accept that the macro environment is shaky at the moment. Obviously, this war in Ukraine with Russia launching new attacks after the peace promise is not ideal. And it's something that could drag on the market if it keeps inflation driving at such a rapid pace like it is at the moment. Now, you may be thinking inflation is great for Bitcoin. And yes, in a way, temporarily inflation is great for all risk-on assets. That includes equities, Bitcoin, because asset values go up when the price of the dollar diminishes. However, if we do get a mass amount of rate hikes as a Federal Reserve response to some of these increases in inflation, that could be negative for the market, as the Fed is in a really tight spot right now. Basically, if they raise rates, they're guaranteeing a recession. If they raise rates in an aggressive or hawkish manner. If they don't raise rates in the correct manner, then they're basically guaranteeing hyperinflation. And hyperinflation almost always leads to a recession. So this is quite, we're at a tipping point at the moment. It could either be very, very bullish for the market as people front run this inflation narrative, or it could be very negative for the market as the Fed reacts very strongly potentially and starts putting in these rate hikes, which would obviously drag on risk on assets. We do see that right now the market is pricing in 9 rate hikes by 2023. I think that's ludicrous. And in my opinion, the Fed cannot afford anywhere near this amount of rate hikes. So temporarily, you could view this as bullish for Bitcoin because they won't be able to sustain 9 rate hikes. No way. So if the market is truly pricing this in, then we could see a positive price response from Bitcoin. However, if inflation does run rampant, the Fed just may be forced to deal with this, and they may be forced to accept some temporary pain in the meantime. So it's something to consider. And just quickly, another bearish factor here is this alts-to-Bitcoin correlation. So we do see when the market goes super bullish, like it is at the moment, this alts-to-Bitcoin correlation crosses this 30% mark. Over the year, we've crossed this level 8 times. 4 times of the 8 times was an immediate top. 3 times, Bitcoin squeezed up one more time before topping. So it's around a 50% success rate, whether we rally over this alt ratio or whether we come back down and test lows. So I do think we are at a tipping point right now. So we have to weigh in the fact that this market is very hot at the moment and that there could be a possibility for a pullback. But what better way to gauge whether we're getting a pullback than bring on Carl for some TA? Because he actually predicted this latest run on his Twitter, Carl Dupes. He went over the latest run and he predicted what Bitcoin was going to do, which is kind of crazy. So we drew this green line in a few weeks ago, and the Bitcoin price has literally followed this exactly. So I don't know if it's a stroke of genius, Carl, or whether it's a stroke of luck, but you did predict this rally pretty successfully, almost to a T. So I'm very impressed by that. But let's get Carl on to give us some more insight into this market at the moment. Carl, welcome to the show.
What's up, Miles? Thanks so much for having me on. How's it going, fam? Yeah, let's have a look at some of the charts. I'm just going to quickly share. Are you able to put that on for me? There we go. So this was essentially what I was looking at on Twitter. So I knew I put green light, red light. There were 2 particular options. I was first and foremost waiting just for the higher high for confirmation. And it is scary how similar the pattern followed out. It has a measured move target taking you up to about $55,000. So at the moment, I would just remain patient. We'll get back to this chart in a bit. I think first, let's look at more a macro picture. So essentially, this is what I'm seeing in the market. It's definitely in agreement with what you were saying. You know, the market is getting quite heated at the moment. However, I'm not going to attempt to fade this trend yet. One can expect a pullback. What I was looking for a couple of weeks back is to clear these key quarterly areas, which was essentially between about $44,000 and $46,000. So you can have a look there. We made it through that. We made it through the whole cluster of moving averages as well. And we currently getting a MACD cross. However, what I would tell the viewers is that what you can expect is oftentimes when you do break these key clustered areas, what will happen is price will oftentimes pull back into that zone. So that's something to watch out for. It will essentially retest that area before going up. So from a macro perspective, this is something to be watching. I'm not sure whether we're going to make it to this key resistance at $52,000 first, 51,900 to be precise, or if we're going to pull back before then. So you got
right now we're really looking for this push up to 52 because we did break the 46K level. I mean, that was a key level we had earmarked for quite some time. We're looking like now either we push up to 52 or we get a bit of rejection around these key moving averages and potentially pull back. So if we do have a pullback, what levels are we looking at right now?
So yeah, I'll get to that now. This is kind of the picture that I'd be looking at. This is how the move could play out. We could potentially make it to that 52. We could even deviate above and pull back down. I would look for a pullback straight into that cluster to retest. When I go into a low time frame chart now, I'll also show you what I mean by that whole cluster. The other option as well is from the bearish side is if we were to deviate through that resistance now, that would be quite a big problem. Then you can target much lower levels. I do have invalidation areas, which I'll put up on my Twitter because it's going to go beyond the scope of this this session that we're doing now. So going down onto a lower time frame, this is essentially what I'm seeing for Bitcoin. Again, it's going to all depend, right, on your time horizon. How long are you planning to be in the market for? What is your risk tolerance? There's many factors that come at play. So if you're a short-term trader looking to play a move for the next couple of days to weeks, I would actually say that Bitcoin's right now in the perfect buy zone. And the reason why is we're still maintaining those higher lows throughout, as well as we've got the higher highs. So here's a high, here's a high, here's the next high. I was looking for the next higher low to pull back potentially into this box. The only problem is with that, you would end up losing that trend line. So moving on to a daily, this is something that a lot of people are watching as well. Is I'm just going to delete this green line so it doesn't make. Oh, it's just a second. Let's just clean that up a bit for you. All right, there we go. So you have the 200 moving average. As you can see, we literally wicked right into that. We've pulled down. We wicked into it again. We pulled down. What I'm happy with, though, is that we're still consolidating in that area, and we are holding that trend line. So your risk to reward is really good at the moment. The area to really watch is where this box is. As long as we can hold this region, we're okay. You had the ascending triangle over here. So I would like to see us hold that triangle. I don't really want to see price deviate back into the triangle again. That could become quite bearish if we start making lower lows. So this would be, for a risk to reward perspective, this box would be your perfect buy area. And that's what I'm watching for over the next couple of days, is for essentially price to pull into the $45,000 region.
So if you're taking a short-term trade, that pullback could be a good entry. If we take the pullback and then push up and maybe attempt these highs again to make the higher high, and obviously there could be further downside, but there are very bullish catalysts at the moment. So personally, my outlook is looking at these key levels, and I think we could very well come up and push 50. Whether we can make a run to 55 is the bigger question, because that is another key level of resistance, and that's really where we want to get to at the moment. But there are, I think there's enough steam in this market with these catalysts to give a solid crack at breaking this average.
Exactly. So this is why I would have a bit of exposure into the market, and it's a good idea to dollar cost average in times like these, because essentially anywhere in this region is where I'd imagine price will stick around for a bit. So what you could do is you could essentially place an order somewhere in that region. You have a very, very clear area of risk defined over here where you could be stopped out. If you get stopped out there, you got about a 5% move back down. So as you would know on altcoins, that may affect them a little bit more, maybe 15% pullback. And then that would be my next entry point. So if we had to lose that area, I would reevaluate again. I would have to have a look at how things go, because then the market structure could be changing. But there's a certain sequence of importance when it comes to trading. And for me personally, first and foremost is the trend is your friend till the end of the trend. So higher highs and higher lows, and that's exactly what we've got on the 4-hour chart. Next up, I'd be looking at horizontals, and then after that, moving averages and diagonals. So again, everybody's risk tolerance is going to be slightly different. Using a dollar cost average approach is a great way to stay safe. You know, you can really get in with a smoothed out sort of area. So if you had to be taking it like that, and your dollar cost averaging throughout, your average entry would essentially be around 43K.
So that's if you're looking for more of a short-term trade, I guess, but also you could take the dollar cost approach if you're looking to accumulate. Obviously, you're a bit more of a short-term trader than me. I'm more of a long-term trader. For the other long-term kind of investors out there, I have a very long time horizon, multiple years in the market. What key levels are you looking at from a macro perspective as a level to accumulate if your plan is to accumulate long-term?
That's a fantastic question. I used to be a much more longer term sort of investor before I started trading. I would look at a couple of things. So from let me just get those off there. Just give me a second. From the bearish perspective, I'm going to show you guys what you could be looking at. Now, I want you to just keep in mind that when you're talking about something bearish, this could take many months to play out. But this is something that I'm looking at. I'm just going to put on over here the MACD on a monthly scale. What you'll notice is, I believe this has happened 3 times before, which has resulted in absolutely mega moves down, where you have the MACD on the monthly cross, and essentially price takes you into a bear market for a year or two. So we have just recently had the cross. I would like to see this monthly start to tick back up. So that's something to watch out for. But for something a little bit more actionable, what I would use is a couple of moving averages. This is a system that I learned from a gentleman who passed away named Tyler Jenks many years ago when I first got into trading. And it's called Consensio. The way that it essentially works is you'll have the moving averages 3, 9, and 30. And essentially what you want to do is you want to enter in different segments to get into the market. But ultimately, you would be 100% invested when you have the short-term moving average on a 4-day chart is where it works best. You want the short-term moving average crossed above the mid-term moving average, which is above the long-term moving average. So the green is about to cross. And on top of that, you want the purple turning up as well. So you want all those moving averages angled upwards. If I have to, let me just try to put on log over here so that I can give you a little bit more of a zoomed out approach. It would have messed you around a little bit in this section over here, which is why I drew this parallel channel. I said, if you don't want to be chopped in and out, wait till we break this channel, which we've essentially done. And look at that. Would you know it's at 45.5, which is again the area I'd be looking for the retest. But let's have a look at this at maybe one of the previous cycles. So had you followed this system, essentially you would have been 100% invested into the market at about $9,000. Okay, that would have held you in throughout, all the way out. When you would have exited the market would have been on this candle over here at $47,000. So I think it works phenomenally well. So if you're a longer term investor, have a look at this. It's a great approach to take. Again, it would have chopped you in and out. This is again beyond the scope of today's show because there's different times that you would enter, but 100% entry would again be when you got short term above mid-term, above long-term, and all of them are angled upwards.
Yeah, I think that's a really key thing to note. As an investor, you definitely want to be buying as close to these moving averages as possible. It just gives you a better kind of risk-reward approach when it comes to accumulation. Obviously, DeFi is always something that I'm using to accumulate personally, and that's one of the ways I accumulate. But also, you just want to be buying at these key levels of resistance and support. You'd much rather be buying on support than if we're overstretched and the RSIs are kind of ticking up towards the top. Like they were yesterday. You kind of want to be buying when the RSI is bottoming out, ticking upwards, and also closer to these moving averages. Just before we wrap up this segment here, Carl, I know a lot of my audience is very keen on Fantom. It's obviously had a massive dip recently. Do you have an entry for us there? What are you seeing for the future of the Fantom chart right now?
I'll get to Fantom in 1 second. I just remembered one more thing. This is also another piece of advice that I would recommend. If you put your chart on a weekly scale and you put the 200 EMA on, what I would recommend is, because a lot of us investors keep cash on the sidelines to buy up dips, right? If you're going to keep the cash sidelined, not all of it, because some of it you can of course use in to earn yield, but if you set bids around the 200 EMA, which is set on the weekly scale, oftentimes you'll find when you get into the best buying opportunities of a bear market, price will either tag or dip through. That was the COVID dip. And this is from a long-term perspective, these are going to be your best accumulation zone. So as scary as it is,
always want cash on the sides just in case a day like this occurs. We did see it on the invasion day. We saw a bit of a decline, and we also saw, obviously, March was the big one. So always keep some cash on the sides in case we do get these big dips. I am going to show you after Carl charts Fantom my personal profit-taking strategy. I made some nice graphs for you guys to be able to quantify whether we should be buying or selling right now. So we will get into that in a second. But let's look at Fantom, because it did take a massive hit, but it's looking like we're starting to gain a little more steam now.
Fantastic. So let's have a look at Fantom. So Fantom has clearly been in a very strong downtrend, essentially since January is when we first took this first leg down. This is on a daily chart. So you got lower highs running throughout as well as making lower lows. Fantom is currently coming up against major resistance, which is why I have the big question mark over here. You got the top of your range over here, so your mid-range. Your range high is going to be in that region. So, and then you got your range low. Now, oftentimes mid-range will act as a certain level of resistance as well. So Fantom, to be honest, has quite a lot of work to do. There's a couple of scenarios. I don't mean to scare the audience when it comes to this one, but at the end of the day, we're going to be able to possibly pick up some cheap Fantom. The bullish case would be...
To me, 170 is the key point. If we break 170, like $2 is almost guaranteed. But the 170 level is going to be a major level of resistance as well. So, I mean, look, if Bitcoin loses some steam here, I think we can definitely pull back to $1. Like, that's not out of the question at all. You've got that level of 80 to 90 cents as well. That's like the bearish case. If Bitcoin pulls back into like the high 30s, I'd say that's in play. But in the short term, if Bitcoin continues to show some strength, I think Fantom's been lagging the market a fair bit. So I think we could really push up and potentially test this $1.70 level. But I don't know if I'm comfortable aping in at 150 and then riding it to 170. I'd almost rather confirmation if I'm going to be making a big buy.
For sure. As a trader, what I would be doing is essentially as soon as you hit that resistance, I would be selling. If it breaks through and it retests, you'll get back in at the same entry, and then you can expect it to take off. And exactly like you said, you got the $1.75 region, which will be your next major resistance. However, this is what you do not want to see. If that hits there and the entire market starts to tank, I would essentially be targeting all the way back down to the range lows, which is at 92 cents. So I would definitely encourage the audience to manage their risk. Consider if you would be entering here, what your risk is. I would dollar cost average again. If this is a coin that you're wanting to hold for a couple of years, just keep dollar cost averaging. Otherwise, this is reaching a bit of a critical point, and I would be more comfortable to enter higher. So I would rather break this region and then enter at about 145, and then I would target 175. Watch how the market reacts at that level. Should you clear that and hold, then off to the races after that. But we know long term where Fantom's going, right?
Absolutely. I'm very bullish in the long term. I think with EVM coming out, more exchange listings, Coinbase, Felix, I think there are some real big catalysts, Aave deployment. So I'm bullish long term, but short term in terms of getting entries, that's where we got to be a little bit picky. We know that potentially it'll do very well long term, like many projects will, but we have to get good risk reward entries as well. So I think it's important. This TA is very important to get your entries, guys. But I just want to say thank you, Carl, for coming on the show. I think this TA is fantastic, and it gives us a really nice context of where we're sitting in the macro environment. So make sure to follow Carl, Carl Dupes. I will put his link in the description as well if you want to go and follow his Twitter. I highly recommend it. I think your TA is fantastic. So thank you so much for coming on.
Thanks so much, Miles. I appreciate it, and I'll see you around. Cheers.
Appreciate it. So that was some pretty Oh, you're still on the stream, Carl. No, that was some pretty nice TA. I think Carl is very good with his risk reward. So we do make jokes on Twitter about Carl being a perma bear and all that sort of stuff. But the truth behind it is he's very pragmatic. So he likes to get good entries. He's very strict with these entries and exits. So that's why I really respect Carl's TA, because it's nice to get a bit of a grounding presence in the office, and so it's not all full degen all the time. But let's give you guys some actionable info, because we just heard the entries and the potential profit taking areas. But let me give you guys my profit taking strategy for what you guys should be doing in terms of taking profits and also accumulating. So this is what I'm actively doing to play the market right now. My goal is to focus on accumulating the quality projects. That's Bitcoin, Ethereum, quality alts like Sol, AVAX, Rune, Fantom. My goal is to accumulate these tokens for the long term, because I have a very positive outlook of the next 2 to 3 years in crypto, and I want to accumulate as much as possible. But what we do need to do to be able to accumulate is be stringent with our profit taking, be pragmatic with our buying, and that will enable us to accumulate more. Because if we're simply just buying all the time and never taking profits, the issue with that is we don't have dry powder to buy dips. So my first piece of advice to you guys is always keep 20% in cash. This is really a bare minimum for me personally. I always try to keep 20 to 25% in cash. This means that if we get major dips, you'll always have some dry powder on the side to be able to take advantage. But when we get major pumps, that is the time to be making sure your cash balance is replenished around 20%. So this is great because if the market's pumping, you can replenish your cash balance. And when the market's dumping, well, guess what? You've got 20% to buy these major dips, right? So you're in a good position. So if you don't have an adequate amount of cash on the side, maybe do take some off the table right now. I still think that we have a very good scenario to push up and test these key levels like 52K. But at the same time, you do have to make sure you have cash. Because if we go down, you guys don't want to be left on the sidelines. I always say, like, buy the dip in my videos and on my Twitter. And I get a lot of comments like, I bought the dip. It keeps dipping. I've got no cash. And I think that's the major problem with a lot of investors. They either buy the dip too early or they don't have enough cash on the sidelines. So as Carl showed us, be picky with those entries and always have some cash to keep advantage. But in order to have cash, you need to have a profit-taking strategy. And if you don't have a profit-taking strategy, you're not setting yourself up for success because that means you don't have dry powder to buy these dips. So I do like to keep most of my money in the market at all times. I usually keep around 80% of my crypto holdings in the market, and I won't play around with it. But then with this 20%, I do like to take a little bit off the table into cash when the market looks toppy. So I've come up with 3 plays for you guys. We all know that the beauty of being in DeFi is that you're eliminating the guessing game. So I always recommend staking your tokens because then you're accumulating. Whether the market is low, whether the market is high, you're working towards your end goal of accumulating. So through farming in some of these great LPs and some of these DeFi strategies that I come on and give you guys every single day, you're actually accumulating and you're eliminating the guessing game of whether to buy or whether to sell. But I do have 3 strategies here for when you do want to sell and how you should be accumulating those LPs. So the first strategy is the bull strategy. Now, this bull strategy is what you do when the market is low. So when the market is low, this is when you want to be bullish because when the market is low, that's when you want to be accumulating, right? So what you want to be doing with your LPs and your farming is staking your LPs, converting all your rewards back into the base LP token, and then restaking your rewards and compounding. So this strategy, the bullish strategy, is what you want to do when you want to aim to maximize your portfolio. So you're basically compounding all of your DeFi rewards back into the base token. So that is my bull scenario strategy. That is if we're bottoming out or either 1, bottoming out and we think there's a lot of upside, or 2, breaking a key level and we're looking to rally to the upside. These are the times where you want to be being in the market. So you want to accumulate your farming back into the base tokens. I have a second strategy though, and that is for where the market is mixed. So that bull strategy of compounding is great if the market is looking bullish or the market is super low and you're going to get some nice entries. But if the market is in no man's land, like it kind of is at the moment, I could make that argument, then we may want to consider this mixed strategy. And this mixed strategy is if we're not confirming that we're bullish and we're not confirming that we're bearish, we're kind of unsure. So for the times when we're unsure, like you could argue we are at the moment, this is how I would take profits. So let's say you have an LP staked in, let's say Beethoven. So you have Fantom and Beats staked in an LP. What you want to do is you'll be earning a 50% reward for this LP that's staked. So you want to be putting 50% of your rewards. Let's say you're earning $100 a week. You want to be putting $50 from that Beats Fantom LP into the token you're most comfortable with. Personally, that is probably Bitcoin. So my goal is to accumulate Bitcoin as a store of value long term. You could pick any token you want though. If you're more risk on, you can pick Fantom. If you're less risk on, you can pick Ethereum. But take 50% of the profits from the LP. So let's say $100 a week, take $50 into the token you're comfortable with. I do Bitcoin personally. Then you want to take that other 50% into stablecoins to lock in some profit. So the thing is, if you don't take any money into stables, then you don't have money to buy dips. Because likely if you're buying Bitcoin, you don't want to sell that Bitcoin. You want to be able to keep that and stack that long term. So 50% of your cash should be going into stables from these rewards if you're not sure whether the market is bullish or bearish. That way you're accumulating $50 a week in stables and $50 a week in Bitcoin, but you get to benefit from the appreciation of your tokens. So let's say you had Beats and Fantom staked in the LP. Those tokens will be appreciating if the market rallies, as Fantom rallies, for example. So you're still making money on the tokens that you're holding, but then your rewards, you're stacking stables. So when the market drops, you have buying power. And then you're also stacking Bitcoin. So you're accumulating a token that you're bullish on long term, which is going to be a very good scenario for holders. So that is the strategy I would recommend if the market is bullish or bearish, if you're not quite sure. If it's looking bearish, so this is for the times that the market is topping out. If we see that we're majorly overextended and that the RSIs are super high, then you want to use your farming to stack stablecoins. So if the market is looking very overextended, everyone's pumping meme coins, the RSIs are at the top, maybe you're low on stables, so maybe you don't have 20% in stables anymore. Maybe you've only got 10% and you need to start accumulating stables in case the market pulls back. This is the strategy I would use. And this is the bear strategy. So these are the times where you have a bearish outlook on the market. You want to be staking your LPs and you want to be setting aside a percentage of your rewards into stablecoins. So what I would do is I would scale out some of your LP. So obviously you want to be taking some of your rewards into stables, but this is the times where you also want to be scaling out your LPs. So I'll explain this in a simple manner. Let's say your LP pumps. Let's say you have Fantom and Beats in an LP. Let's say the market is looking very overextended. If you're up 25% on that LP, take a quarter off the table. Then when that LP goes up another 25%, take another quarter off the table into stables. So then you'll eventually get to the point where you can take out your initial investment into stablecoins. So these are for the times when the market is looking toppy or you don't have enough stables. You can actually scale out of your LPs to take profits, and you can do this incrementally. So you can get to a point where you have got your initial investment out. And this is something I always preach in crypto, especially DeFi. Take out your initial investment as soon as possible, because then you're essentially riding the profits, right? If you make $1,000 on $1,000 investment, take the $1,000 off the table when the market's frothy. And then you can ride your 1,000, but you're riding pure profit at this point. And you are taking some money back into stables to have that buy power to buy those dips. So I hope you guys enjoyed this video. I gave you 3 strategies on what you should be doing with your rewards if the market is bearish, bullish, or if you're just not quite sure. Those are 3 actionable strategies for you guys to use in terms of profit taking. We went through the bull and the bear case of the market. Right now, I could make the argument that the bull case is very, very strong. Maybe it slightly outweighs the bear case at the moment, in my personal opinion. But there is still potentially further downside with some of this macro environment uncertainty. So just make sure you have stablecoins just in case. But I'm not exiting this market. I'm taking some profits. I'm being pragmatic with my LPs. But I want to be in the market for the long term. And overall, that is my goal. I hope you guys enjoyed the video. I will see you in the next one. Peace out.